So we have debtors control account. For debtors control account, it's the account for our credit customers. So whatever our credit customer pays us, it adds up, right? Whatever they pay us, it adds up. Whatever we sell to them, that we are expecting to get the cash from them, that is a debit, so it is positive. But as soon as they return goods to us, or whatever we are taking away from our customers, it's minus, so it's what? A negative. Whatever is coming to us from our customers, positive, it's going to be on the debit side. But whatever is going to be taken away from our customers' account, it's going to be on the credit side. Whatever is taken away from our customers' account will be what? On the credit side. For example, discount allowed. As soon as you give a discount to your customers, it simply means your customer is going to pay less than the invoice. Better stop writing. I keep saying the same thing. Don't try while I'm talking. Discount allowed. You are giving a discount to your customer because it's paying its invoice before the due date. That means you are encouraging the customer to pay earlier. So that reduces the amount of its invoice. So it's on the credit side, minus. Return inwards. Your customer returns goods that it's already purchased from you. It returns it. So it is minus from the customer's account. Are you getting it? Payment received. Now you receive the payment from your customer. So your customer is not, that means your debtor has reduced. It is minus. Bad debt written off. Some of your customers did not pay back. As soon as you sell on credit to your customers, it is expected that some of them will not pay back. Bad debt written off. It is minus. Bills receivable. When you receive the bills from your customers, it means it's minus. So whatever you get from your customers reduces the debtor's account. Whatever you receive from your customers, it does what? Reduces the debtor's account. So it's going to be on the credit side. Transfer to creditor. This one is, you are having a transaction with your supplier or with your customer. So there's a transfer from you to your creditor. So if there's a transfer from you to your creditor, it's a contra entry. So it's going to be on the credit side of your debtor's account, and it's going to be on the debit side of your creditor's control account. We call it contra. Whatever you see that is transferred, it's a contra entry. It means it's going to be here and it's going to be there. So you are having a transaction with you're having a transaction with a supplier that is buying from you and you are buying from it. Do you understand what contra is here? You sell pens. You sell pen. Your supplier, the customer that you are owing, maybe it sells, but the customer that is owing you sells something else, and you need to buy from it. So if you are buying from that customer that you sold to on credit, and you are doing a transfer, so instead of it paying for the amount of this, it reduces the amount it's paying because you are buying something from it. That's a contract. So the accounts, we have a contract on the credit side here, and the creditor's control account. The supplier that you are holding will have the same account, but it's going to be credit here, it's going to be debit there. But for debtor's account, whatever you see that is a transfer to creditors is a contra entry. It means it's going to be here, it's going to be your creditor's control accounts too. Because we have debtor's control account, we have creditor's control account. Creditor's control account is for your suppliers. Debtor's control account is for your customers. You sell to some people, debtor's control account. You buy from some businesses, creditor's control account. So whenever you have a transaction between them, it's a contract. Do you get contra entry there? Contra means it's going to be here, it's going to be there. Contra. Transfer to creditor. You give out. When you give out, is a credit entry here. So the creditor will receive it, yes or no? It's going to be a debit entry, the same amount. Do you get it? So that takes us to this question. We have this is a debtor's control account. So we are preparing the debtor's control account. The debtor ledger balance is this. These are the amounts. So we have to prepare a debtor's control account on this item. So we have this. No, just this.
We didn't write it.
You did not like this?
Yes.
Some of you, well, I have it in.
That error, what's the error? That error, yeah, the left arrow.
Cancel.
Yeah, that's correct.
But I have it already on the school app.
Oh, okay.
I have it on the school app. Do you get it? I have it on the school app, so you can copy it from the school app, okay? So we have this now. So we're going to prepare debtors control account. So I have to use white. Debtors control account. We have the debit side, the credit side, date, details, amount, date, it's so small. Let's put it in here. Date. So we have, before they said debtors ledger balance on 1/1/2022 is 170,000. So we have, what's that? We have 1/1/22. Debtors ledger balance, so we have our balance brought down. Balance brought down. How much is that? 170,000. What?
I'm asking him about 2000.
When we get there, you ask me, please.
Okay.
And you better focus here now. Our balance brought down is 170,000. Now they said debtors ledger balance on 1/1/2022 on credit. So we're gonna have 1/1/22. That's the credit balance. Balance brought down for how much? 6,600. Then we have discount allowed. For discount allowed, it's going to be here. The same date, we have discount allowed. Discount allowed. I told you, whatever is going to be deducted from our debtors control account, from our debtors invoice, will be on the credit side. Discount allowed, that means you give your debtor a discount because it's paying earlier, so that reduces its invoice. The amount is 4,800. Unit under unit, tens under tens, hundreds under hundreds, thousands under thousands. I'm doing it now. In the exams, you put your thousands under unit for me, I will just cancel all your book. I'm telling you right now. We'll move on. Sales including cash for 25,000. So sales including cash for 25,000. That means there's a cash payment out of this 410,000. So you take it away from 25,000. You get my point here? So credit sales. We need credit sales here. Credit sales less credit sales less 25,000. 25,000. So take it away, please. 25,000 minus 410,000. What does it give you? 25,000 minus 410,000.
300.
Don't give me. That's a calculator, please. Don't use your head for me here.
So understood, the credit side is always minus.
Yeah.
And the debt side
No. Whatever you're taking away from your invoice is on the credit side. Whatever you're taking away from your invoice is on the credit side. Whatever adds up is on the debit side. 335. Thank you. 85. 385,000. Then we'll move on. Then the next one, we've done this. This is done. This is done. Discount allowed is done. Sales is done. Payment received from customer 240,600. Now your customer paid. It reduces its invoice. Yes or no? Yes or no, please. Payment received. Payment received. Amount 240,600. 240,600. We'll move on. This is done. Then we have bad debt written off. Bad debt written off means your credit customer did not pay. So it reduces the invoice. Bad debt written off. How much is that? No. How much is bad debt? 6,500, right? Bad debt. Bad debt written off. 6,500. 6,500.
Mister, how did you get the 325,000
On where? Which one?
in the debt side?
Yeah, they said sales, the total sales. We have the total sales is 410,000, but it's inclusive of the cash sales. Whatever we have here is a credit sale. So the total sales of the business is 410,000, including the cash sales of 25,000. So we need credit sales, yes or no? So for your credit sales, it will be 410,000 minus 25,000, which is cash. The total sales you have is 410,000. But part of the sales, there was cash of 25,000 paid. You know, there are two types of sales. We have cash sales, credit sales. So cash sales is going to be in the cash book. Credit sales will be recorded in the debtors control account. Cash sales will be in the cash book because payment is done. So, but your total sales here is 410,000. So you have to take away the cash sales because we need credit sales. Is it clear now? Any question up to now? So we'll move on. So we have transfer from debtors ledger to creditors ledger account. That's contract. So transfer to creditors account. Transfer to creditors account. To creditors. Contract. How much is it? 4,200. 4,200. We move on. Bills receivable. How much is that, please?
36,400.
36,400. Then what else do we have?
So,
Dishonored check. A check that was dishonored. So that means the money still stays with you. Dishonored check. How much is it? 3,800. Dishonored check. How much is that? 3,800. 3,800. If the check was not dishonored, the customer will still not be owing you. I'm going to explain that again. 3,800. If the check was not dishonored, it means the payment was done. But the check was dishonored. That means the customer is still owing you. Do you understand? A dishonored check is a check that was not paid by the bank. So that means your customer issued a check, which you took to the bank, but the bank did not pay you. The bank wrote DAR on the check, which means drawer's attention is required. So you have to give it back to the drawer, the owner of the account. Do you get it? So dishonored check. If it was honored, it will be payment, which will be here. Do we get it? Then what else do we have here? So we've done, transfer is done, bills receivable issued. We did that?
yes.
Then we did dishonored check. So we have interest charge. Interest charge on overdue payments. Interest charge means your customer is owing you an invoice, but it's supposed to pay on the 31st. It's not paying on the 31st. It's not paying you earlier. So you are putting interest on what it's going to pay. So it adds up. Do you understand interest charge here? The overdue account is that account of your customer that's supposed to pay earlier, but it's not paying. So you are charging the customer interest. That adds up. Your customer is owing you 10,000 euros. It's supposed to pay on the 30th of January, but it's not paying on the 30th of January. And now it's February. So you are charging interest for the overdue account. So it adds up to what it's going to pay you. Do you get it now? So whatever adds up is going to be on the debit side. Do you get interest now?
He's going to pay you.
He's going to pay you. He's owing you.
More.
Yeah, he's going to pay more. So that is interest charge. I told you when I'm talking, continue to write, okay? Continue. Interest charge on overdue account means your customer is owing you certain amount of money, but it's not paying. Because it's not paying, it adds up to it. Late payment. So it's interest charge on it. So that means it adds up to you. So it's a debit on your control account. Do you get it now? Interest charge on overdue account. Interest charge. Interest charge. Interest charge. How much is it? 2,400, right? 2,400. That is done. What else do we have? Debtors ledger balance. Now look at here. Debtors ledger balance, which is credit, 2,500. So it's going to be debit in your here, in here. This is what you have as a credit balance at the end of the year. A credit balance is a debit balance for you. It means this is what they are owing you. This is what they are owing you on this side. So whatever they are owing you now becomes a debit for you. Do you get it? So we have debtors ledger balance, which is this. So we have, what do we call it? We call it debtors credit balance here. Debtors credit balance. So we call it debtors credit balance. We call it debtors credit balance. This is what is left that they are owing you. This is what they are owing you now. These are your debtors. This is what they are owing you. So whatever they are owing you becomes yours. So you add it up to your debtors control account. Do you get it or not? Debtors ledger balance, the credit side. This is the credit side. So you add it up to your debit side. So we call it debtors credit balance, which is how much? 2,500. Now please add them together for me, please. Add it together, please. 170,000, 385,000, 3,800, 2,400, 2,500. So we're going to have our balance carried down here. Balance carried down. Because this side was bigger, this side was bigger than this side.
So what's the last one?
Here, 2,500. $1 million.
Four.
How can this be 4 million? Please check well. How much is it? 170,000, 385,000, 3,800.
Oh, wait,
It's not even up to 1 million. 170,000. $563,700. So we're going to have 563,700. Now, add this together and take it away. That's our balance carried down. The difference between the credit side and the debit side is our balance carried down.
do we add or?
Add all this, then minus this from this. So that will give us 31.
240, 600.
What?
240. The payment received.
This together.
Minus the rest.
Yeah, what was it? 6,005, right?
Yes.
6,005. Yeah, all this together minus this. So this will be 31. This is 1, so this will be 31.
2995.
299 and
22. 299,000
yeah, and
Yeah.
wait, no,
Oh,
we
wait.
have to.
minus from that.
Yeah.
So this will be 31. This will be 1, 1, 1, 2, 22. Balance brought down.
264.
Balance brought down. How much do you call it?
264,600.
Minus.
264,600, right?
That's when we minus it.
Yes. So this plus all this gives you this, right? Did you get it or not?
No,
Please?
that's well.
This minus this must be this.
When we add all of these, it's 299. 299.
Give him the calculator.
Hey, can you just speak in English, please? What I want you to do for me is this. Add this, and this together.
This is the value.
Yeah, that gives you 200,099.
Then you take it away from 563,700.
Yeah, that's the.
264,600. That's our balance carried down. I said the difference between the credit side and the debit side is your balance carried down. So your balance carried down on 31/1/22 is your balance brought down for the next month. So the next month our balance brought down will be 264,600. Is it clear now? Do we get it now or not? How can you get it when you are writing? It's your cup of tea. Yes? Yes, I will. I think it's clear, right? I keep saying you don't try while I'm talking. You don't listen. Don't worry.